Well, I think the markets are still very much on the edge. While there has been some stabilization of the Indian rupee, the focus will very much be on elections in the next couple of months, and what sort of government the elections will turn out. Certainly from my contacts with various clients in India over recent weeks, and certainly meeting them in Mumbai, there's a sense of concern that the election might throw again a very unstable coalition. Even if Congress is not at the helm, it may not be a government that may be able to push through significant reforms. And so, again, a lot depends on the election outcome. And so I think markets are very much at the moment are very cautious about what to expect. Well, I think it goes back to the issue about which currencies have specific problems, and it's really country-specific, idiosyncratic issues, and therefore the fragile five, in a sense, still remains very vulnerable. So countries such as Turkey, Brazil, Indonesia, India to an extent as well. It's countries that really have financing issues. There are also political concerns with elections in several of these countries, India and Indonesia, for instance, in Asia. And clearly, as tapering takes place and capital leaves emerging markets and searches for, I guess, better growth in developed markets, we may see more and more pressure on some of these countries. Well, again, a growth weakness, or some of the weak numbers that we've seen in the US and China are adding to the malaise in markets, and the concern and the volatility is intensifying. However, that being said, in the US, we think this is a blip. We think the overall trajectory of the US economy is still going to be fairly robust in the months ahead. And we don't see a particularly big risk to US growth going forward. China, on the other hand, is expected to slow further. Our forecast is around 7.2% for Chinese growth this year, which is on the low side of consensus, and therefore we may see more negative surprises in China. Now, what that does is potentially mean this flow that we're seeing from emerging markets into developed markets is likely to continue. So we will probably see more of an outflow from emerging markets in general in the coming months, which will be reinforced, of course, by tapering. We believe the rupee is still going to be vulnerable in the coming weeks, but given that there is so much focus on the elections, we won't see a huge directional bias ahead of the elections. And I think for that point of view, we're going to see some stability to slightly weaker bias in the rupee. But overall, our view is that we'll see further pressure in the rupee in the months ahead, even after the elections. And we could see, again, with tapering, with concerns about India's external deficit, albeit a narrower one than previously, we won't see the rupee come under any real upward pressure. So we could see the rupee heading towards the sort of 65, 66 regions in the months ahead.